My name's Easton Harris, and one of the first candlestick formations we're going to be looking at are these bearish reversal signals, also known as exhaustions. Okay, so if you look at the candlestick on the left, you can see that the opening price is at the bottom of the candle and the closing price is at the top of the candle. Alright, now we have this line going through the middle of this candle body towards the top, and what this shows is that price within this time frame traveled all the way up here and then got rejected back down, closing a little higher than we opened. But this wick shows that there's a lot of force coming from the top, pushing price back down. Price could not sustain a price point at that level and was forced to reject back down. Now on the right here, this red candlestick, the opening price is at the top of the candlestick and the closing price is at the bottom of the candlestick body. Now this candlestick also has a wick that goes to the upside, right? Price again was able to push its way up there at one point within that time frame and then got pushed all the way back down before the candle closed. Now, the only difference between these two is that one is a stronger sell signal than the other. On the right-hand side, the opening price of this candle was taken out, and price actually reached a lower low and closed lower than it opened. This is a stronger indicator that price will continue to the downside. Whereas the one on the left, price closed higher than when it opened, so there wasn't as much force applied to the one on the left. The one on the right has the stronger sell sign. Now, these are bullish reversal signals. These are bullish rejections or bullish exhaustions. Okay, so on the right, the closing price candlestick is at the bottom of the candlestick body. The opening price is at the top of the candlestick body. Now, the difference between bearish and bullish exhaustions is where the wick is at. So you can see here that the wick comes from the bottom of these candlesticks. Okay, so again, price shot down, but this time the force was coming from the bottom, pushing these candles back up. Okay, so the one on the right did end up closing lower than it opened, and the one on the left, the green one, closed higher than it opened. So, with that being the case, the green one on the left shows a stronger indication that price should be heading to the upside, okay, because price cannot sustain any price point below these candles. Alright guys, now we're going to hop into the charts and I'm going to show you real examples of these candlesticks in live market. Alright guys, we got EJ pulled up on the 15-minute, and let's just go through and see if we can't spot any exhaustion candles. So right here, right from the get-go, we have a solid exhaustion candle right here. Price came up, got rejected back down by the time this candle closed. Price has since been falling to the downside. Okay. Right here, we've got a smaller one. Right here, we got a little exhaustion here. Price fell to the downside after printing one of those. Right here, we have one that's going to the upside. Another exhaustion candle. Right there. Price rejects up. Price continues to the upside afterwards. Over here, we've got another exhaustion candlestick. Price exhausted up. Price continued to go up. Now here, this one has a little bit more force to it because the candle body is quite a bit bigger. But overall, once this printed, price made it to the downside. All right, there's examples of this stuff everywhere. We have a green exhaustion candle to the upside. We have another one here, and we even have one right here. You can see price printed these and continued to the upside. Price printed this one and then fell afterwards. It's very easy stuff. You guys will catch on pretty quick. Right here, a good way to remember this too, by the way, is imagine that the exhaustion candle, like this one right here, you take this exhaustion right here and you compare it to this arrow. We have a wick, right? And then where the arrow branches out, that's like the candle's body. So if you just picture that the body here is the head of the arrow, that's the direction that you're headed after printing that exhaustion. You can see that once this printed, we then headed to the downside. Also, once this red one printed here, we headed to the upside. Okay? And there's examples all over the place, guys. Here's another one right here. Printed that. Price went down from there. And then before making a move back to the upside, printed yet another one. Okay, so these candlesticks are everywhere. Moving on, moving on. We've got more exhaustions. There's a lot of wicks in here. It's back and forth. But price does print an exhaustion right there. What does price do? Price goes to the upside. This is the general idea behind these candlestick formations. But you have to listen to what price is telling you all the way down. I mean, price, just to give you guys an idea, price was all the way down here, and this candlestick was one big mean red candle up until it got rejected back up. And then following the rejection, price goes on up. Moving on, moving on. This one, there's too much wick on this side. For me, I wouldn't label this an exhaustion. You got exhaustion on both sides. Moving on, moving on. Wick on both sides. Over here, we have two exhaustions right in a row, in case you missed the first one. Okay, so we got this one and this one. Both of these candlesticks printed. Price came down, could not withstand the force of the buyers here. Closed back up here, and then following, price began to rise. Very easy stuff, guys. Over here, we've got more exhaustions. Both of these are bearish candlestick formations, but one of them did close higher than it opened, and then vice versa. So even though one is technically a bullish candle and the other one is a bearish, they're both bearish signals. Okay? We've got more exhaustions here towards the bottom. What did price do? Price went up. Moving on, moving on. You've got two exhaustions here, right here and right here. And doji within here. Actually got three exhaustions. Boom, there's another one. And then price does indeed flow up. Down here, we've got more examples. There's plenty of examples here. Right here, another exhaustion candlestick. Price flew up. Over here, we got a couple. We got this one, this one. We even got a small one over here. See, price printed this smaller one. Price went down a bit and then whipsawed back and forth, creating this doji before heading up. Over. All right, we got more exhaustions here. Boom. Exhaustion there. Exhaustion there. Price prints this, falls. Price prints this, rises. Got a really small exhaustion here, right there. The move following that, she came back up. Let's see. Another one. Price was moving up really fast. Exhaustion prints. All momentum stops. Price falls. Down here, a lot of exhaustions down here. Got 1, 2, 3, 4, 5. 5 exhaustions all through here. And each time one printed, price rose. Down here we've got some more. Got an exhaustion here and one right here. Price comes down, rejects back up. Price then follows on up. You have to pay attention to what price is giving you guys. Price will tell you what it wants to do. You just have to listen. Exhaustion here. And we also have an exhaustion right here. Okay? So two exhaustions fighting it out there. But overall, you can see this green one did have a longer wick on the end of it. And ultimately, price rose. We've got another exhaustion here. Price comes up, rejects, falls. Another exhaustion right here as well. They're everywhere, guys. If you pull up a chart and go look, they are everywhere. We got an exhaustion right here. Now, this candlestick here, this red one, even though it has a very long wick, it's not an exhaustion candlestick because the body is so long. And you also have wick on the other side. So this is not an exhaustion candlestick. This one, however, is pretty textbook. And then price flows to the upside after rejecting. You will see these everywhere, guys. They will print everywhere. Price prints, rises, everywhere. You just have to scroll left a little bit. You'll find them. You can go look at them. Prints these two exhaustions, price rises. Oh, we got to get up here. Oh, we are flying down. Even these little moves, these smaller moves print exhaustions. Small exhaustion moves down. You just have to pay attention, guys. That's all. Scroll through here. Now this, you can tell there's a lot of volatility through here because we do have this exhaustion here. We also have this one here. And this one, this red one, honestly, its candle body is a little bit too big for me, but compared to the wick, yes, it's definitely an exhaustion back up to the upside. But you got to watch these because if they do have strong candle bodies, they tend to not play out as great, especially if the candle body contradicts the wick. And what I mean by that is price opened at the very top portion of this red candle and then dropped all the way down here, rejected back up, and closed here. Now, from open to close, that's a pretty strong candle relative to the candle bodies around it. You see what I'm saying? So this did have some force to the downside and still managed to close down here even after price tried to fight to get it back up. So when you have a decent sized candle body, that's kind of what outlaws that. You don't want to have a candle body that contradicts. You have a strong bullish wick because the bulls are coming in, creating this wick. So the wick signals that price wants to go up, but you have a strong bearish body, and that signals that price wants to go down. So is this an exhaustion? Technically, yes, but I wouldn't trade this one. Now, moving on, do one final example. We just have this exhaustion right here, and it prints, price falls, next candle immediately after. It's very simple, guys, very simple. That's going to conclude this video. I hope this was easy enough to understand and we got through enough examples for you guys to get an idea of what an exhaustion candle is. Go through your charts, check them out, and see how they react. Welcome, my name is Easton Harris. In this video, we're going to be talking about railroads. So what you see right here is a bearish reversal signal called a railroad. Now you can see that they look like railroad tracks. Now, the important characteristic here about this railroad is on the left, the green candle opens at the bottom, closes at the top. And then the red candle that follows opens at the top and closes at the bottom. So price, even though the green candle closed up top, the very next candle shot price all the way back down because price could not sustain a price point at that area. Now here's the bullish version of the railroad. This is a bullish reversal signal. On the candle to the left, the red one, price starts at the top of that one, closes at the bottom of it, and then opens up at the bottom of the green one and then closes at the top of the green one. So price comes down and then immediately gets rejected back up within the next candle. Even though these candles closed in these areas, they immediately were rejected back in the other direction. So this is the bullish version of the railroad, and we're going to dive into the charts, and I'm going to give you a glance at what that looks like in live market. Alright guys, so we're going to be looking for railroads. I'm going to show you a few examples of that today. So right here, these two candlesticks right here, that's a railroad. So we have a bullish railroad, right, because price comes down, and then price comes back up, mimicking the other side essentially, and price continues to the upside. So there's one example of a railroad in the charts. Another one, really solid one right here. Okay, these two candlesticks, solid railroad there. Had a solid green candle and then a solid red candle. Our bears took over, railroad back down, price falls to the downside. Very simple, guys, very simple. Let's see if we can find any more. All right, here. Right here. Now this green candle does have a little bit of wick on the end of each side, but that's okay. Price formed the bearish railroad and fell to the downside. Again, up here, before price took this huge fall, these two candlesticks right here, bearish railroad, bearish candle followed. Up here we have a railroad right there. Bears came in, bulls took over, price then immediately went up. Super easy stuff, guys. Right here we can see that price printed a railroad, bearish railroad, candle after was bearish. And ultimately, there's a lot of volatility in these moves right here, and price headed back down once again before going sideways and then falling once again. So a lot of volatility here in this area. Let's see. Where are my railroads? Ton of exhaustions. Ton of exhaustions over here. Here we go. There's our railroad. Right here. Bears come in. Bulls take over. Two candlestick formation. Bullish railroad. Price goes to the upside. And then all these exhaustions kick in, and that was the weekend. It gapped right down. Again, right here. Another bullish railroad there. Price continuing to the upside. Right here. This one is close. This one is very close. This is still a railroad. It still holds the same weight. Even if they are a little bit off on size, just a touch, it's still a railroad. Bullish railroad. Price goes to the upside. Right here. We got a bearish railroad. And price fell. Very simple stuff, guys. Very simple stuff. We have a bullish railroad right here. Between there. Bullish railroad prints. And ultimately price continues to the upside. Also had an exhaustion here as well. Down here we have another railroad. And after this prints, price continues to the upside. Here we have another example right through here. Railroad, price continues to the upside. Here we have an example of a bearish railroad, price continuing to the downside. Price was falling, bulls kicked in, bears fought right back. and maintain control of the market. Very easy stuff, guys. Here's an example of a bullish railroad. And immediately after, price rose. If you look right here, we have another bearish railroad. Bearish railroad printed, and ultimately price fell. Right here, it's a smaller one. It's a smaller one right here, but still a railroad. Bullish railroad, price rose. Very easy. Here we had another smaller bearish railroad right through there. Bodies are a little off. Price railroads and falls. They're not going to be perfectly side by side most of the time, guys. Right here, you can tell this green one here is a little bit bigger as far as candle body goes. What price do? Price started to rise. Then you got an exhaustion, price started to rise again. I'll show you guys one more example here. That is another bullish railroad. Little bit of wicks on the end, not a big deal, but the idea is that the candle bodies match really closely, and then after printing this bullish railroad, price does go to the upside. All right, guys, so that's a couple of examples of the railroads. They're fairly easy to see once you come across them. They'll normally mimic one another, so that's why it's easier to see. Close to identical. There'll be a few variations, but close to identical, except one will be bullish and one will be bearish. All right, guys, that's going to conclude this video on railroads. Keep an eye out for them.